Welcome to today's session. I'm glad to see you all here as we continue our journey in understanding the Oracle TRCS and how it helps us manage tax reporting in a smarter way. So this session is organized by the BISP Solutions. Today our focus is on a very important foundation step, that is the configurations in TRCS. Now you may ask, why are configurations so important? You can think it of as TRCS as a tax reporting engine. Unless we configure it correctly with the right structure, the engine won't run smoothly. So the configuration decide who we are reporting for, where we are reporting, and how certain tax calculation like deferred tax will happen. We will look at two specific parts today, that is configuring the entities and the jurisdiction, where we set up the legal companies of a group and link them to the respective tax jurisdiction like India, US or UK. Then ensure that the TRCS can calculate the taxes as per the local laws while giving us a consolidation group view. And the second one will be configuring the temporary differences. This is where we deal with one of the most critical areas of tax accounting, as difference between the book accounting and tax rules. These temporary differences are the basis of you can say DTA or the DTL, that is a deferred tax asset or the deferred tax liability, and the IFRS or any other standard requires us to account for them carefully. To make this practical, I'll also walk you through a detailed case study or an example, you can say, to show how temporary differences arises in a business situation. It can be in form of like depreciation, provision, or a different cost, and how we calculate the deferred tax step by step. We have also covered in the old one of our old videos, that is working with the automation. So let's start with our first one, that is how why are the configuration important. So if we go under our application, or from here we will go to our dimensions itself under the create and manage. Here are different dimensions, right? And under this we have different jurisdiction as well as the different entities. So the configurations are like the blueprints of your TRCS application. So without the proper setup, calculation like ETR, the current tax, or the DT, that is the deferred tax, won't be corrected, because it helps us in accuracy, which ensures each entity is mapped to the correct tax jurisdiction or the tax rate. We can also say that it helps us in compliance to make sure that the laws are considered while consolidating at group level, which we can do through the automation itself. So we can also say that once temporary differences are configured, TRCS automatically calculates the DTA or the DTL itself, right? For with example, I will tell you that, for example, if ABC group with three entities in a different three different jurisdiction, that is India, US and UK. Each has a different tax rate, for example 10, 20 and 30. So the TRCS through configurations applies 10% for India, 20% for US and 30% for UK automatically. At group level, it combines everything and calculates the overall effective tax rate. Without configuration, this would require hours of manual spreadsheet. So let's get into our configuration. So first one here is our entity, right? So these are our entity here. We have the no entity. If we select the no entity, then we have the total geographical entity, which is for like North America, South America. Under North America, then we have different entities like LU 101, 102 and other. We have here, you can see that one is the operations, distribution, vision, MRC, education limited. So under each entity, what you say is for example North America is not operating on itself, right? So there are different entities under it. For example, there is operation that is going on, distribution that is going on, and many other things, right? So here the each entity is one legal company. You can enter the details with the entity name, code, and even if you want the reporting currency itself from the currency, right? So here if we want to configure any, then we can just actually add here. So if we have like North America, South America, instead if we need any other, we can take any other. Let's actually take, we will add a child here under it. What we will name it, let's take it as North America 1, right? Now here under this we will put a alias, or instead of this we will just put uh, let's put the name itself. And in alias we will just copy it. We will say the B1, that is the branch 1, right? We can set from here what will be the data storage, that is the store, that means only storing the data. Never shared, that means the data will be stored but never shared with any other entity. Shared, that means it will be stored and it can be shared with any other entities. And the dynamic cal, that means the under which if this is a parent and under this we have children, so all the data that we have under it, or the storage type, all the entities under this one, the all the data will roll over to this single parent under a dynamic cal, right? So we will just say that it's stored, then we will put it in the console itself. It's based on the USD, as we are taking North America. Then we have the data type if you want to specify one. Now we have the attribute values. We don't need the attributes value right now in this one, so we will leave it and we will save it. Here you can see that I have created a new parent, new child under the total geography, that is our ancestor. Under this we don't have any other like North America. So if we need any entity under the North America 1 itself, then like LU101, we are gonna just click on North America. From here you can select that add a child. Let's take IO101. This will be productions, and we will save it. Now if we want, we can add a sibling to it. Here you have added a child, then we have option to sibling. We can add the siblings, we can add, and we can add that production, instead of production, let's say processing units or other things like that. Then here we have, this is IO and this is LO, right? So here we have the aliases itself, both are set it to store, that is it is just allowed to store. Now here you can see that I have chosen the store data itself, so all the data under it will never be actually clash with that North America or South America or any other, right? So this is what basically how we configure the entity. Same is the process with the jurisdiction itself. Here with the arrows you can even move them up. For example, with this arrow you can move it up, and with this arrow you can move it down. We have a pencil here that if you click on it, it will give you the option to edit it, right? Here you can reset it or configure according to yourself. Then under we have that we can cut it from right here, and under North America, if I like, I can paste under this. See here, are you certain you want to move LO102 and its descendant to North America? So as we are not the administrator, we are unable to actually move it right now. So any other thing is like, if we don't want this, then we can actually delete it from here, or we can actually go as show it as top. Only this one will be shown if we select it, right? So if you want to delete it, we can either delete it, we can show its ancestor from here, like and the entity under the FCCS total geography, the total geography is his ancestor, and the ancestor of total geography is the entity, right? So if you want to delete it, you will just go to and we can delete it right here. Yes, I'm 100% sure. Give it some time, just refresh it once, see. Now let it actually refresh it. It actually takes some few seconds, what you can say, max to max 30 seconds or 1 minute. So what we have carried out the procedure here is that according to a need we create a entity, either in the, if we are under India, so for example, and we have a child under it, that is Delhi, then we will create Delhi. Under Delhi we have different regions, that is Gurgaon, Noida, we can create also Gurgaon, Noida according to it. Or we can take any other country, for example Canada itself. Under Canada we can have its different region that we are just going to see under the jurisdiction. Both the processes are same under each configuration, that is our entity, or what you can say is the jurisdiction. Here the entity is for the where it is actually under which geography it's actually working, that is it is either North America or South America. Jurisdiction is it's national and regional wise, right? So it's finished. Here we will click finished. Now we will move to our jurisdiction right here. Here we have the jurisdiction. See, under this we have no jurisdiction, that means we are just making the sheet without using any jurisdiction. For example, if I am working from India, that means I am using no jurisdiction, that means I am following the law under here, the Indian law itself. Or if my company is banded with the US law GAAP, then I will be working on the US GAAP without using any other other GAAP or the standard itself, right? So now we have the different jurisdiction that we have here. Like no jurisdiction means we don't have any other companies, or you can say that too also. For example, I only have my company in India itself, so I will calculate for it. So now under the total jurisdiction we have no jurisdiction shared, then we have the national one, then we have the regional one. Under rational, here you can see that we have here US, UK and Canada, Argentina and different countries. Here you will notice that in the alias we will take the full name, right? But under the name we just take the two actually postal code that we actually use for them. That is for United Kingdoms we have UK, for Canada we have CA, for Argentina AR, right? So under the name we can't actually fully name it because it doesn't allow us, application doesn't allow us. We have to put the names, the full name under the alias itself. For example, if you need under this, we'll add a child. Let's see that what we don't have right now. We even have India, alright. Let's take a hypothetical example. We will add a child here. Under this, for example, we have a country which we are just going with the example, right? ABC. So we will add it same way, like we have a kind of country name, then it's we have the ABC company, then we will add just AB itself, as it's we are denoting it with AB itself. We will put the full name right here. We have that what storage type we need, so it will be stored, right? We don't actually want it to roll over to another one. So here we will just go and save it. As I've already told you in the entity, it's same as that. Now we have here the AB, that is our alias ABC, and its storage, its data storage is stored, right? So here you can create the national. Under this, it will calculate only for the for the company country ABC itself, right? And all the values will be then rolled over to the TRCS all national, which is dynamic cal, which I already told you that under this all the amount roll over to the ancestor itself, right? So as we have created this one, this is same procedure as the entity itself. You can edit it from right here, cut and put it another where. You can add a sibling to it, that means it will create another country, and you can add a child, as well as all the procedures same, as all the tools are same here, right? So we will delete it from now. Now here you can sort by the children's or the descendant itself. Now we will go up and we will collapse this one, and then we will work on the regional one. Here you can see that under the regional we have US region and CA region. CA is a Canada region, right? We were talking about it, that as we have the North America, you can see under this, under US we have different actually regions, that is like Alabama, Alaska, California, Connecticut, Illinois, Minnesota, Nevada, Ohio, and US blended. Here the US blended refers to any other region which is actually for example, these are the important regions under the US one, so they are actually mentioned here. Any other region which is which have a low tax rate or which is not considered will be put under the blended one, and the blended one will have all the total of the others that have been put under it, right? Same is with the Canada itself. We have the CA blended and we have Ontario. If you want any other, you can just do the same process as you have done under the national. Here we can just take it in another sense, that is, let's actually add a child here. We will take India for example. Right, under description, oh sorry, IN, we will take it on the alias, we will take India, right? We will have it, we'll save it. See, the IN is all, so we will just use ID. If we can use the ID itself, see the ID we have put here, that means Indian region. Under it we will add a child. We can say like Delhi, we can put DL. This is just actually a hypothetical example. You don't have to actually do it. All this will be you have to make according to your client's needs, right? Delhi, and this will be stored. We'll save it. So here you can see I have actually put it under the Delhi under India itself. So you can actually create different region also. That can be like Madhya Pradesh, Uttar Pradesh, or any other region itself, right? So this is the procedure, that how you actually configure the jurisdiction itself. Now before we move to our another topic, that is configuration of temporary differences, let's first start with if like what is the actual meaning of the configuration itself, the temporary configuration. So here it means that what all the are the differences, that means after the closing of books you actually recognize that there is a difference between in your depreciation or provision for doubtful debt, then you adjust it according to it, and that is a temporary difference we are talking about, right? Here we can say that the first step under the TRCS application is to define the categories, that for example it can be depreciation, provision, or etc., which you decide that where temporary differences apply to your group, right? Then the second is that enter the calculation rules. That means we are entering the calculation link, assigning the type of the temporary differences, that is taxable or deductible, right? That meaning the relevant tax rate that system pulls from jurisdiction itself. On the jurisdiction, as we have we actually added the region itself, we can also add the currency on which it will be actually using it. So according to here, you can go to the input currency. You can see here there are different currency for different countries itself. Here we have the INR itself for India. Here we have USD for US, and Canadian dollar, CAD for Canada. Now let's see that how it actually helps. So we will go to our home page first, then we are gonna go to our application itself. Under application we'll go to config. Because of the these all are interdependent, right? So here we can have exchange rates. When it's consolidated under a one file, exchange rates actually help us in review and actually putting it all together. Right here you can see we have different exchange rates, that is the USD, CAD, and different ones. And what it is actually here are the means, for example, the ZAR, that is the currency of a country, it is transferring, oh sorry, instead of ZAR, that UAH, it's the currency which is transferring to USD, right? So what will be the rates itself? So here it is 0.311424, right? Same will be from CAD. If the UAH is transferred to CAD, then here will be the entry itself, right? You can even edit this file itself so that it will actually show it in your main documents, where it is actually shown that the group level actually report. So now let's start with the temporary one. So the temporary differences include all the differences between the tax and the financial reporting basis, or basis of the tax of the assets or the liability, you can say. We'll go here, here we have the dimensions, right? If those chooses differences will result in the taxable or deductible amounts in the future years. The common difference, yes, we have it under account, I think so. Okay, we have tax account, then we have pillar 2 accounts. Okay, we will see that where we can find it. So the common timing difference include those we can relating to the depreciation method, right? So the deferred compensation plan, contract, bad debts, or so on are included under this, right? You can say that the deferred compensation or plan actually or the bad debt, let's say, these amounts are stored in a member of the account dimension that we will just search from right here. After I was not remembering the file name, it is I think temp gs total, I think so. We'll drill it down. Okay, yeah, I was right. Here under the tax account you can see the temp gs account. When reconciling the temporary differences at the national level, note that the differences can occur when you reconcile from a reporting standards to a statutory standard, or when you reconcile from statutory standards to a tax reporting standard. For example, you say reporting the standard is IFRS and the tax return is based in US in UK is the UK GAAP, right? So the temporary differences are entered in account under the GAAP to stat parent. I think we don't have any other thing under it. We have, see, here is it, right? So if we need example for if we need a temporary differences tab, that is stat to tax, we can actually add it from here under it. We can just click, we can go here, we can add a child or a sibling to it, as we have done in the jurisdiction itself according to our need, right? So they don't actually have to exist under a flat structure under a parent. They can actually have its they can be in the hierarchy itself, or they cannot also. So here under we can see that we have a dynamic cal, that means under the TRCS underscore temp gs total. Sorry, I can't actually remember it, or actually I mess up with the pronunciation. Under it we have the alias, that is our total difference, that is gap to stat, that is a dynamic cal. So all the things that are related to gap to stat, that means gap to statutory rate or the statutory regulation according to what we are doing, it will be dynamic, and all the things under it will be recorded under that thing. So here we have the fixed asset, that is a book depreciation, and intangible asset and etc. These are all stored, but the main file, that is the total temporary difference, has the dynamic cal. So here it tells us that these are the common configuration that we do according to the client's needs. So it can be editable according to it, or we can add or remove that. So we can make an exception that we can create a child here or in the jurisdiction according to the needs or the customization of the clients, right? So this was important so that we can add a different jurisdiction if it's needed, or the entity, for example, instead of product we have actually I forgot it, that what all entities we have. Under this we have the total geography. Yeah, we have here operations distribution. For example, we have to actually have the production unit also, but we can't add it. So according to the client's need, we are going to add it. Then we have to if it is under Indian jurisdiction, then we have to do it under Indian jurisdiction. If in future the India laws changes that there will be regional tax rate, then we have to actually switch it to the regional tax rate. We will actually make under jurisdiction, we will make under the region IN, as we have already made. We have the jurisdiction, TRCS total jurisdiction, and the regional one. We can make here the Indian region, that is IN region, under which we can put all the regions under it that are under India. That can be a Delhi, as we have discussed, or any other one. So under today in this today's in this today's session, we have learned about the different configurations of the entity, jurisdiction, and the temporary differences itself. As if we are not using this a proper entity, we can't actually move forward with the reporting itself, right? The application would create a error itself, but if it actually passes your entry, then you are going to create an error that will actually put a hefty penalty on you through the tax regulatories or etc. So these are all the common configurations, or the important configuration, you can say, that a TRCS consultant should know. So in this session we have covered all three of these, and